Hello. So this is 7th October. We commencing analysis. Calendar-wise, Monday and Tuesday are dry, to be honest. So they can be good technical days. Seeing as though we're not waiting on a bunch of news to come out, apart from these minor, medium impact news. Two big things this week. You have FOMC minutes, and you have CPI, and then Wednesday PPI as well. I guess that's also important. So but the key events are the FOMC and the CPI. Now, normally, if there's no movement, then you can expect movement, historically speaking, at the FOMC minutes. But the reason I think that may actually not be the case, and we may still actually get, a reasonable amount of movement before, and then a lackluster FOMC. The reason I believe that is because we have CPI right after. So whatever the weekly range is, we're gonna want to conserve, and not move as much with the FOMC in the hopes of saving that movement for CPI. So that's just my based on my observations with price. I think that's what can pan out. But then again, it's not like I'm trying to predict the CPI or FOMC, targets or anything. So I'm not fussed. But again, for my surgical strikes now, yeah, this just helps me basically to basically avoid problematic time. Okay, when not to push it. Okay, now from the notes that I had last week, the key piece of feedback that I received was let's just remind ourselves some basics first, okay? We do not need to have FOMO for the simple reason that GU has plenty of opportunities in one day. Even in one session, there's like 3 trades sometimes, depending on the day. Also, do not need to force a reverse entry due to FOMO because chances are a lot of the times it's going to want to come back. Now, I'm not saying it's going to want to come back way deeper, like 50% or behind 50%, but still, it's going to come to a reasonable price, okay? And what if you still miss it? Well, guess what? You have not got a losing trade. So again, that should be the easiest decision I think at this stage now of my development. Okay. Also, because that we have a lot of opportunity in GU, we can often assess if it's if the lower time frame is behaving in a way where it's giving us intelligence that it wants to go to that direction that we are aiming for as a drawn liquidity. Okay, in which case, sometimes, especially in high resistance profiles, we may have to just wait basically before we enter. I want to see a rejection of a wick or a fair value gap or a breaker or whatever. I need to see evidence basically that time elements are in price and it's about to move algorithmically. Okay, and that also brings me to my point about not worrying about not basically entering at a worse price and actually waiting, especially high resistance. It's going to want to do a deep one, okay? And that's actually, you can use it as an opportunity to get a better entry, and that also helps your risk reward. You don't have to then hold it for as far basically into the external range. So that it's good for that as well. Obviously, low resistance runs, that's the only time where you run the risk of, if you're asking for it to retrace too much into the internal range, that because it's low resistance, it's gonna not do that and run away. But that again, um, you know, um, it doesn't happen. It doesn't happen a lot from my experience. That's only if it's like really running, and then you can easily tell when that's happening anyway. Again, don't hold yourself to a perfectionist standard yet. Okay, just know basically, generally speaking, that if it's a high resistance run, I want to see price do a deep one. Okay, internal range before it continues going to that direction. Now, being profitable on a weekly basis, not the daily basis, is the goal here, okay? If you basically somehow hit in a couple of days, 2-3 days trading, hit the weekly objective, which is 2.5 to 2%, even if it's 2%, I'm happy. I close the charts, okay? I demo it after that. Um, again, because we're trying to cut down on the drawdown, those are the days that can really like slower progress. Don't push it basically on days that are just less probability, low probability, shitty price action. Don't push it. Like, there's no fucking need. Like, there's so many opportunities where we can absolutely do so well that we don't need to push it on the crappy days and lose ourselves mentally and, capital wise as well on the account. Also, what I noticed last week in the performances, um, losers were basically a lot of the time, like 90% of the trades that were losers, I noticed that it was entering too early basically. Like, a lot of the times I was actually right, like on side per se, but it's just basically entering too early. and then losing once or twice, or maybe in 3 times, and then realize, oh yes, okay, yep, I see the drawn liquidity now. I'm on side, but the thing is, you've already taken 2, 3 losses, and you're just like mentally weighed down, you know, and you basically just feel this fatigue, basically, and then you're not as in the moment or as active to perceive the actual setup that it will yield you, basically, a good outcome or a low resistance run. Um, so again, I would say basically let the chumps go for it. As soon as anything opens, London, New York, it's always going to be the first part. Is always going to have the Judah swing nature to it. Let retail have it, okay? Let retail have it, you know, because guess what? Plenty of opportunities brings me back. Everything links back to this. Plenty of opportunities. You can just get another bus if you miss it. So that's a key thing I noticed. Now, if I just go to the chart, that's just general advice I was giving myself. But chart, my expectation was actually completely run over and wrong, but it doesn't really matter because we're just scalping, lower time frame trades that are easy basically to hold because we just get the target and move on. If you just note on the weekly chart, let's just go on the monthly. So October opened. It's going into this large SIBI, okay, on the monthly chart. So you wanna go ahead and just mark that. Also, high of that is 9177. Okay, so monthly SIBI. But if I want to take your attention to the lower time frame here. So if you notice that weekly SIBI here, we closed way above that. That was actually meant to be a resistance, so to speak, right? But it's like closed way above that. So that's all already giving you a very strong signature of this move here being that displacement that we were waiting for in the week. That makes these series of down close candles an order block, okay? A bullish order block. You have an order block there, but actually I'm more interested in seeing something more clear on the daily, and I think that's actually this green candle here. That's your daily bullish breaker, okay? And in terms of drawn liquidity, aside from the large monthly SIBI that I mentioned here, which is the 50% real close, I was also looking at this weekly high here. Not to mention there's a consequence encroachment of the wick for the monthly chart, as well as a 75% level. So there's more than one things converging in that area of price, which would, um, demand my interest to be in that area. So not to mention the SIBI. If you get really excited, maybe you can even go there. We have CPI, I mean, so who knows, we can actually do that. Also, because we have plenty of breakaway gaps slash you know yeah, sorry, breakaway gaps. I was just gonna say something, yeah. And also these counter CBs, what does this become now? This becomes an inversion, doesn't it? Okay, not this, just okay. The weekly fairway gap itself became the inversion, so coupled with this, so this can be violated. I don't want to see on a daily chart body that closes below the mean threshold of this, and definitely not this. We'll just say I don't want to see a body close below the whole of this, okay? It can stay inside of this. It can color outside the line here, on a wick basis to the low of this. But body-wise, I want to see it stay above this 50%. If it's above this as well, 50%, and only wicks are going below this 50% of the daily, that's really bullish then. That means it's going to just like absolutely destroy it up here. There's a small fairway gap, I want to just keep it there. I want to see I want to utilize that. Like, do we actually go up on a body basis, come down, use it as a support, and then go up? Same with the order block, but I don't need a million things on the chart, so I'm just going to take that off. Little volume imbalance in there as well. So now you want to see this stay strong here. This breaker, yeah, it's definitely a breaker, but then again, we don't really need price coming all the way here to the breaker, because if it does, then it's already like it's not as strong basically as we would like it to be. So you want to ideally see it stay in the upper quadrant of that weekly as well as potentially the daily for a risk for the risk off. Okay, because dollar higher and then pound will be lower as a result of that. If I just go on the hard time frame here, not really much here on the monthly in terms of an inefficiency, but on the weekly though, I would probably pay attention to this. You see that we overlapped. That volume imbalance, we can just roll that back for now. Don't need it yet. But we do need this. So I'm just gonna throw this out here. The weekly inversion, because you have a body laid below that, 32.8, 32.480, 32. Perfect. So I'm just gonna hide this. Doesn't include the chart, but again, if this was to stay in the upper quadrant, then this needs to stay in the lower quadrant as a result. You have two CEs here as well, possibly be a point of interest. And then again, drawn liquidity wise, I just go on the daily chart here. This high is looks like it's this low actually. Technically it's this candle, but in terms of a swing low, this is the one. Now again, first obviously is this, we're aiming at. Probably gonna catch up to DXY, especially looking at the bags it's leaving as well. Also, below this, what do we have? A lot of inefficiencies, so plenty of targets here. Weekly resistance wise, daily fair value gap here. Then again, that that weekly one is pretty much inside of this, so it matters not. You can just use one of them; it'd be fine. Inversion weekly, and then again, your weekly AMD. I would probably think, in terms of your weekly AMD, that if you was to go below, like we open up, imagine start sinking, which can happen a lot of the times on Mondays, and we hit a major discount level, like this, for example, Dixie, and maybe a previous daily low or two here. If that happens early week, then it's gonna be a hard week. Okay, straight away, I'm telling you, a little bit weird because that will then mean it can then retrace and go a really deep retracement internal range, or it can wait till the CPI after hitting this and go up, and then CPI comes in, takes it, it continues the basically the order flow, which is bearish, aiming at these inefficiencies, the sell program basically. But if it doesn't, a clean week would be where it opens in a premium, with a gap opening here, preferably, so discount in this case, spends its time there until CPI, and the CPI drops it, and then it's easier because CPI will be the distribution for the week, and before that we're just manipulating. But anyhow, whether it's opens here or it attacks the lower levels, it doesn't matter. First part of the week is going to be automatically the accumulation, and then manipulation wise, FOMC could start the manipulation, CPI could like end it and start the distribution basically when CPI comes. So again, it's not going to be as clear where it goes up and goes down, but at least you have a rough lay of land now. So again, hunt inside of the windows. Again, pay attention to what I said when I said the Judas swings. How you want to let the less informed traders do it and stay away from it because you're experienced, you know better. You can easily grab a few setups. Not a problem for you anymore. You can read price like clockwork. So trust me, you're there's going to be very high chance that you will not miss out, because the thing is, we know, like, it's an objective truth. There is manipulation in the start of pretty much every session, because guess what, everyone wants to trade, especially Monday, and naturally there's going to be movements that will be overly like easily reversed basically as you go deeper into the session. So they're normally for just sentiment reasons. So, but guess what? You missed one. Guess what? No one cares. Okay, let's say yours. Just a quick example, right? Let's say, let's just take this piece of price action. Okay, let's say this is New York Open. Okay, and this low of the 4 hour is my drawn liquidity. Okay, have this CB. I know somewhere in the CB I will get my reaction lower. Okay, let's say this opens here. No, this is the opening price. No, let's say because I see the CB, I'm thinking, okay, it's done this and now it's sharply reversed. Yeah, but it's gonna close the CB. Let's just take a small scalp. Don't do that. That's what I'm saying. Wait for the less informed retail to go after that because yeah, you might catch that small scalp, but you could very easily just be in a hurry, low resistance profile, and just do this, and then you stopped out. Even though now you're going to be on side in the short move, it's just not necessary to take that loss. Basically, trying to chase this counter move, unless there's a big counter move, unless we're waiting on a I don't know news event or something, and then you know there's plenty of time for it to go here before the news, before distribution lower. Then yes, but there's no need because most of the time it's going to be Judas. You know, again, I'm not expecting you to nail it, okay, on this, but at least I want us to at least try and have a concern, um, and understand that the first part of the session, New York is going to be manipulation. At least give it like half an hour to trade, the first half an hour, and then obviously see what we have. So that will be everything.